Um, Good afternoon, everybody. We are studying budgeting. In the previous class, we have covered the process. And today's subject under the budgeting, public budgeting and budgeting process. In the budgeting process, we have to discuss cycle, right? Budgeting cycle. So we already discussed about the definition of budget, and we already done this part. And today we will cover budget cycle and it's kind of budget process. You know that budget has different functions: economic function, political function, legal function, and managerial functions. Now we'll start budget cycle. Budget cycle mean what? The cycle mean it has a defined starting point. From the starting point, it passes several stages and a point until a point where the budget the life cycle is ended. Again the cycle, and a certain point again the budget process started, and again it's work as a cycle. So budget process is a cyclical, right? So there's a one starting point and there's an ending point. Also at the ending point again the next point starts. And in almost all countries the cycle is annual. In our country also budget cycle is the period, the cycle budget cycle life is 1 year. Every year a government prepare budget. Rather than midterm budget includes 3 to 5 years. Some countries are presenting mid-range budget, but many countries in the world they are preparing annual budget. There are essentially two ways of characterizing the cycle. There are essentially two ways of explaining the cycle. The first way is outlining the bureaucratic task. So there is a still rigid rules. There is a rule of thumb. There are rule of thumbs when they are preparing and implementing budgets. So bureaucratic task associated with functional stages of formulation. Here first functional stage of formulation. So first the stages start from forming the budget. So it's kind of what the government preparing the budget based on their policy of the government. That is called what the policy formulation and enactment or approval. So once the Minister of Finance presented the budget in the Parliament, it should be voted. After several discussions, the document, the speech of the Minister of Finance become a law, budget law, right? So once it has been approved the Parliament, it considered as budget enactment. It's approved one. Once it's approved, execution, right? So the execution means what they are implementing the budget, and end of the year audit and evaluation. So there should be a control mechanism. There should be a control and monitoring mechanism. It is done by normally Department of Auditor General. Time to time they visit the public sector institutions and they are audit the documents, audit the financial transactions, whether are there any deviations, or are there any shortages or abuses of fund. So it's kind of you may study it management planning stage, and organizing and controlling. So organizing, controlling, right, and monitoring, controlling, right. So like here, planning stage is what budget formulation, and it's approved. Once it's approved, it's been implementation, and after implementation, and then there should be a control mechanism. They are controlling against the standard. The standard is budget. This is what the bureaucratic approach, bureaucratic task, functional stages of form. Second one, the generic logical flow of the stages of the model of policy process. So it's based on the World Bank Public Expenditure Manual Handbook. You can refer that book. Actually, it's not a type, right? Actually, it's one page, and then it's a second page. So sometimes it can be seen as a different view. The budget cycle can be seen as a different view. The first one is one view, and the second one is another view. So you can take what here the functional stages of model. This is the first perspective. Here, this one. First, outlining bureaucratic tasks associated with the functional stages. So that's what we are going to discuss. Functional stages. Here, the functional stages model. First model is called functional stages model. So under this model, the budget process will be compressed into 4 broad functional stages. So it has the budget process consists of 4 stages, 4 functional stages. First one, the budget preparation or formulation, budget preparation and formulation, and approval and enactment, submission of the draft budget into the parliament, and there will be so many argument for and against the proposal. The third one is performance or executions. So then they implementing the budget, and finally the evaluation and reporting. These 4 stages, these are the 4 functions of budget process. So this is a more detailed one. So basically the functional stages include 4 stages, and these 4 stages can be expanded up to 11 stages, up to 11 number of stages, and these 11 number of stages can be 4 types, right? 4 types. Up to this, formulation, budget formulation, and this up to this part is implementation, approval, right? Approval, enactment, and this is executions, performance, and this part evaluation and monitoring, right? So it has the functional stage. First one, the formulation. This second one is approval and enactment. Third one is implementation. Fourth one is reporting, performance, evaluation and reporting. So first one is resource projections prepared by Minister of Finance and approved by the Cabinet. So resource projections, here they are mentioned they are considering resource mean financial resources. Financial resources. The Minister of Finance have a rough idea on how the government going to raise fund and how much amount of money will be the government can be raised to meet public expenditure. So that is called what? Resource projections. So this projection is done by normally the Ministry of Finance, and these projections will be approved by the cabinet. So based on the resource projections, the fund projections, it means they are estimating the income, the money available to spend to the public in the budget. So based on this estimation, Minister of Finance will set some expenditure limits. The Minister of Finance set some expenditure limit. For example, for particular ministry, for example, Ministry of Agriculture, the Minister of Finance decided to allocate 1 billion, right? For example, 1 billion. So that is what is a limit. So likewise, each and every institution, each and every heads, each and every ministries under the cabinet, the Minister of Finance give advice to them, advice to the each ministry, the all chief accounting officer and accounting officer, when they are preparing the budget, they set a limit. So you have to prepare, the Minister of Finance instruct those ministries and departments, you have to prepare budget. When you prepare budget, you have to consider your expenditure limit for this year, this much. So based on that guideline, and ministries and other public sector institutions will prepare budgets. Drafting the budget. So budget guidelines and expenditure limits circulated by Minister of Finance. Here, based on the income estimate, and Minister of Finance send some guidelines to prepare a budget. It's a request. It's kind of request issued by Minister of Finance to prepare budget for the next year. And then line agency expenditure proposals are prepared and submitted to the Minister of Finance. Already Minister of Finance instructed all public sector organizations to prepare their budget based on their guidelines submitted by the Minister of Finance. So where you can find expenditure limits. So based on the guideline, each and every line ministries and public sector organizations prepare their budget, prepare the next year budget, and that budget will be sent to Minister of Finance. And finally, here proposals are priced by Ministry of Finance and negotiation with line agencies. Proposal are priced by Ministry of Finance and negotiation with line agencies. Here already Ministry of Finance instruct them to prepare budget with certain limit, certain expenditure limit. Some ministers may argue that the allocated fund for the ministry is not enough, right? Based on the policy proposals of the government, they allocate money. So to the allocated money for a particular ministry, sometime it may not enough to meet the certain targets. So in that time there will be some kind of negotiation between Minister of Finance, representative Minister of Finance, and a particular ministry. There will be some negotiation. Based on that negotiation, so they will make some adjustment. Right? Based on that negotiation, they will do some kind of adjustment. and state budget prepared by Ministry of Finance. Then by collecting all the things, the Ministry of Finance will prepare the budget. See here at the top, Ministry of Finance. Ministry of Finance. Under that, there are a lot of line ministries. For example, Ministry of Education, Ministry of Education, Ministry of Agriculture, Ministry of Petroleum, and Ministry of Industry and Commerce, Ministry of Health. So under each ministry there are the department. Here in the Ministry of Education, Department of Examination, University Grant Commission, and NI, National Institute of Education. So there are a number of departments. So under each department there are so many institutions. For example, under EDC there are so many universities, and right, Department of Examination. Right here, initially what they do, the Minister of Finance estimate the revenue. So based on the estimated revenue, the Minister of Finance will circulate letters, not the guidelines, to each ministries. So each ministries again they will forward that document to all departments under his ministry. So based on that guideline, so each departments will prepare budget based on the instruction of the line ministry, right? So they do so finally each department will forward their budget in each ministry, the particular line ministry. The what particular ministry line ministry do, what particular ministry does is, so they aggregating the budget, aggregating individual department budget as an aggregate budget. So each ministry is having the departmental budget, aggregated budget, and the Ministry of Finance will collect all the budget from each line ministry, and based on this one, the Minister of Finance will prepare a master budget. This master budget include all the expenditures covered by line ministries. This master budget called as state budget or national budget. Here, a state budget prepared by Minister of Finance, and this budget, the state budget will be submitted to approved by cabinet and submitted to the parliament. So up to these stages, how many stages? Up to stage 6, all are inside, all the things are going on inside of the government. So there are a lot of argument between Minister of Finance and line ministries. So all the argument and all the contradictions, all the issues will be sorted out within the government. You see the process 1 through process 6, all the process are taken place inside the government. Once they have solved all the issues, they will submit their budget proposal to the parliament. Right? They submit in the parliament, and in the parliament, Minister of Finance present their budget proposal in front of the member of the parliament. So in that time, opposition party members will raise so many questions against Minister of Finance. So that time, you may observe that the ministers, the cabinet ministers, also answer the questions raised by the opposition party members. In addition to finance ministers, the cabinet ministers will support the finance minister in the reading budget, because it is not a proposal of the Minister of Finance. Rather, actually, it's a proposal of the government. On behalf of the government, the Minister of Finance presenting the budget. So therefore, opposition party members asking questions against the Minister of Finance, it means they are asking questions against the government. So therefore, the cabinet members have responsibility to answer such questions, to protect, to safeguard the government. So once it is approved, so there are three readings in the parliament: first voting, second voting, and second voting, third voting. Right? So based on the argument and based on the common suggestions, the finance minister will revise the budget. And finally, it's undergo for voting, election. Right? Not say elections, kind of voting whether the budget can be accepted by the parliament members or not. So once it's voted and approved, and the speaker will announce that the budget becomes an act enacted. So now the budget speech of Minister of Finance become an act, a law. So this law will be valid for 1 year, budget law, because Sri Lankan government prepare budget for 1 year, it's annual budget. So this is stage number 2. And third stage is what? Budget executed by line ministries, line agencies. So once the budget is passed, the Minister of Finance will allocate money according to the budget proposal to each line ministries. So each line ministries will spend their money funded by the treasury, and also the ministry will distribute their money to the departments under the particular ministries, and the department may allocate money to particular institutions. And then once they executed, state accounts prepared by Minister of Finance. So finally, they have to report. The Minister of Finance should report about the expenditure made during the period by the public sector organization to the parliament. Right? So state accounts prepared by Minister of Finance. Then these state accounts, aggregate account, will be audited by Department of Auditor General. And finally, it's about approval of the audited account by the parliament. Then he sent the Auditor Department accountable to the parliament, member of the parliament. So if there are any abuses of fund, and opposition party members and government party members may ask question in that regard. So it's a process. Now you see, you may observe that the process has stopped here, right? End of life cycle, the ending point of the life cycle. So again start. So how they start the next budget? They will do here. They will do some policy revisions, whether the previous period policy are effective, do we make any changes, any adjustments, are they are preparing new budget based on the lessons learned, based on the experience of previous budget. So that part will be explained in the second stage here. This stage, genetic flow of second one. Here this one. So we have discussed this part, and as I told you, it's a review, revise, and prepare another budget. So that stage is this one, second stage, second phase. So it's called what? Generical logical flow of stages model of the policy process. So but they are revise and present the budget, prepare the budget. Now let's see each stage is functional stages one by one in detail. So this kind of presentation focuses on the budget itself and treat the policy process that interact as factors outside the circle which impinges the condition of the process. Uh, it's a budget. So budget proposal actually it's represent government policy. It's a government policy proposal. So when government propose any policies, there are some factors. The government policy will be affected by some outside factors. The outside factors are here, for example, so donor budget meeting for swap and public expenditure requirement input and analysis, public expenditure reporting input and analysis, IMF negotiation, government donor meeting and annual review swap. So what does it mean? So for example, as I told you earlier, based on the income projections, Ministry of Finance give guidelines. Based on the guideline, the line ministries will prepare the budget. Some line ministries will get funding from other sources too, not only from the treasury, not only from consolidated fund, not only from the government. A particular ministry may receive money funding from donor institutions, donor countries, donor budget meeting for swap. Say for example, health department of health, Ministry of Health may receive donation from World Health Organization. Sometime other countries like the USA has given a lot of vaccine during the COVID-19 pandemic. So it's a donation, it's a donor. And India, China giving a donation. For education, UNICEF will give a lot of money to the particular line ministries. And ICRC and USAID, JICA, Australian Aid, they are also giving donation. Most importantly, European Union also give money. So when the particular line ministry preparing the budget, this factor also impact on their budget. They have to consider that kind of budgeting. And proposal appraised by Ministry of Finance and negotiation with line agencies. Line agency mean what particular line ministries and other government agents. So they are discussing with performance evaluation report inputs and analysis. So here they are discussing about the previous year financial performance, right? Financial performance and other requirements. They do some analysis. So this analysis also may help them to prepare the budget. And IMF negotiation. Here a state when the Minister of Finance preparing budget, IMF, International Monetary Fund, consideration also required. So you may observe that, you may heard about that the government, the previous government, the good governance, they have, when they are preparing budget, they have taken the advice or the condition of IMF to revise the Inland Revenue Act. So therefore they have revised. The previous act was number 10 of 2006 Inland Revenue Act. So based on their consultation of and based on the advice of IMF, they have revised. And now the new act is number 24 of 2017 Inland Revenue Act. So there are some conditions. And now government struggling now, present government struggling due to non availability of foreign reserves and non availability of enough fund. So this time IMF, the organization like IMF may definitely help countries. So what the issue actually now? So why some ministers, cabinet ministers are not like to get the help from IMF? What's the reason for that? Actually, what will happen is when they are getting loan, or when the Sri Lankan government get any assistance from IMF, they will definitely put some conditions, like so the for example, you have to solve some sort of issue, minority issues. You have to solve out some sort of irregularities in their ministry level, government level, and so sometime IMF may advise the government to sell public sector organization, or to they advise them to convert the public sector organization into private sector organization. For example, Sri Lankan Airlines, it's a government owned company, but it makes losses sometimes. Sometimes IMF may give pressure to the government to convert the Sri Lankan Airlines as a company. CEB, if the CEB make losses, the IMF may request them to modify. Sometimes IMF may request to solve the human rights issues prevailing in this country, right? Minority issues. So they will put different conditions. So that kind of negotiations, IMF negotiation, also will impact the state budget proposals. And government donor meeting. Government at present, in present situations, the government ministers, representative of the government, meet diplomatic missions, embassies, right? They do some kind of discussions. They're involving kind of discussion to help Sri Lanka during this financial crisis. So when they are preparing budget, and they have some kind of negotiation with them. So normally this kind of negotiation will happen with European Union and Commissioner of the United Nations, WHO, and other countries, right? The embassy of Nigeria, embassy of Australia, embassy of India. So they do some kind of discussion. And also here annual review swap also will impact the state accounts prepared by Ministry of Finance. Review, the previous year review and the current year review may impact on their state account preparations. So these are the external factors. So this kind of presentation focuses on budget itself and treat the policy process that interact as factors outside the circle, so which impinge and condition of the budget process. It also demonstrates in some detail the bureaucratic process associated with preparation, enactment, but compresses the implementation process. Here, when you look at the process, it's kind of bureaucratic in nature. So bureaucratic nature means what? Bureaucratic in nature. Here you see these steps. Step 1, step 2. So by Minister of Finance will give prepare, right? Minister of Finance will give guideline. Guideline mean what? When you prepare budget, you have to limit your expenditure this much. and here based on that guideline they are preparing budget. So normally at this stage here, this one, so normally it will happen November every year, November, beginning of the November, the budget speech, submission of budget, national budget submission will be done in November, month of November every year. So before November they have to do this kind of process, they have to finish all the processes. So it's a rigid one, right? There is a tight schedule. So in that schedule they have to do all the things. This kind of thing is what very rigid administration in that process, right? Rigid administration, like that's why it's called as bureaucratic things. So it also demonstrates in some detail the bureaucratic process associated with preparation, enactment, but compresses the implementation process. The second one, the budget preparation and formulation. Budget preparation, formulation. Actually, it's a step one. So budget preparation usually starts with an assessment. By the Ministry of Finance of macroeconomic framework for the coming period, at least the coming year budget. Next 3 years, if the medium term budget framework is in place. So that is step number 1, estimation. So in this stage, the government may expect GDP growth, unemployment rate, poverty level, literacy rate, right, foreign exchange reserve, export, import, and this kind of projection they may done. So GDP growth and of growth of domestic revenue and of those external financial flows which support the budget, they will do some kind of estimation on this. Scope of domestic financing of any budget deficit, right? So are there any sources of financing the budget deficit, the budget gap? Non-discretionary spending. What do you mean by non-discretionary spending? So it means when you look at the budget, we already discussed it. Expenditure. This part of expenditure belongs to what kind of expenditure? The major part of the government expenditure is what? The major portion is what? Present government at now. Any answers? Any answers? The major part is allocated for what? Salary and wages. And this part, second important expenditure is what? Second one, what is that? Second, can you hear me? So what is second one? Second part? The second part is what? Interest payment. And this part, loan settlement, principal amount. And this portion is what? This portion is money available for public service. Here, so whatever the government come to the power, can they reduce this cost? Can they avoid this kind of, any government, do they have power to compromise in this portion? For example, in the last year, government allocated or 40 billion, for example, 40 billion rupees. So now present a new government come and instruct to the minister, you cut it as a 20 billion or 10 billion, or the interest expenditure already they paid 30 billion. The government says, new government says, no, you reduce it to 2 billion. Is it possible? Do they can make adjustment? Do they have power? Do they have power to cut this expenditure? Is it possible? Yes or no? Yes or no? So they don't have, they can't actually, they can't. So first when government prepare budget, government prepare national budget, first they have to allocate money for these purposes, right? So first the government allocate money for salary, and allocate money for interest payment, allocate money for loan settlement, and finally government has this amount of money. So government can play the budget in this portion, within this portion. So here they can't touch, they can't influence here, they can't make any adjustments. So it's called discretionary expenses, non-discretionary expenses. Okay, non-discretionary spending, which it will have to meet, that is those inescapable commitments. So anyway, the government should allocate money to pay salaries to their government staff. The government should allocate money to pay interest on the loan received. So this kind of expenditure called non-escapable commitments. So inescapable commitments which government cannot vary by policy, such as debt servicing, pension obligations. So the volume of resources that should be held back in the contingency reserve. Second one, right? Even though they have allocated money for salary, wages, interest payment, and loan settlement, government should allocate a portion, the amount of money, to meet unexpected things like tsunami, flood, COVID-19, landslip, right? So this kind of unexpected events may occur to the country. So to meet that kind of unwelcomed, right, incidents, the government should allocate money. That's called contingency fund. After subtracting contingencies, non-discretionary spending, the ministry is able to forecast the resources available for the allocation of ministries and other spending departments. So first they allocate money for that non-discretionary spending and contingency reserves. Then balance amount will be available to the development of the country. An informed analysis of resource needs of various spending agencies. So this is usually based on turn from previous budget and provisional estimates for ongoing budget exercise. So the balance amount they are normally preparing, estimating based on their previous year budget. Now we move second step. On the basis of macroeconomic forecast, the Ministry of Finance will issue a budget guideline paper setting out the basis on which spending department should prepare their budget bits for coming year. So based on the guidelines, they have to prepare budget. So this usually include indicative ceiling for each department. So what's the spending limit for each department? Though departments are free to contest these in subsequent budget discussions, ceilings are often based on crude adjustment to the previous year's figures. taking account of the overall change in resource available for allocation. So they may also take account at this stage of previous outturn figures or non-policy commitments. So where medium-term expenditure framework is in place, the ceilings are taken from the second year of previous forecast. So unfortunately we don't have medium-term budget. So therefore we don't have second year budget. So we have only previous year budgets, adjusted as necessary in the light of changes in resources available and experience of budget execution. In most cases, however, the main influence is the aggregate budget of the previous year. In some countries, departments may be asked to prepare budget based on high cases and low case scenarios. It's kind of flexible budget. You may study that management accounting or cost accounting. But the capacity at 100% capacity, how much cost will be, 80% capacity, how much budget will be. And so in that way some department should prepare budget in different scenarios, but in our country we don't have that kind of practice. Stage 3, each spending department agency prepare budget submission on the Ministry of Finance. It is based on their guidelines submitted by the Ministry of Finance. For the format for these budget proposals or bid is usually determined by Ministry of Finance in order to ensure that they can aggregate it using common classifiers and budget categories. As I told you earlier, so each department budget will be aggregated at ministry level, and there are a lot of ministries, and all these budgets should be aggregated at Ministry of Finance at the national level. So to aggregate this budget, so there should be a uniformity, there should be a proper classification of expenditure. They have some certain code number for each and every expenditure categories. So based on that code, this code classifications are common for all department, all ministries, all public sector institutions, for the purpose of aggregating the budget, the total figures. The Ministry of Finance has job of seeking to reconcile the bids from individual spending department and overall resource available. So the Ministry of Finance then analyze the received budgets. So this may be done by correspondence, or there may be provision of a specific budget hearing within the Ministry of Finance. So if there are any misunderstanding, or there are any clashes between the Ministry of Finance and a particular line ministers, all the issues will be resolved at the ministry level. So the minister may argue that the fund allocated for his ministry is not enough. They may request additional funding. Continuous issues may be taken to political level to be resolved by ministers. Following discussion of the budget bids, the Ministry of Finance put together the overall budget consistent with resource envelope as received during the year and submitted to the cabinet. So finally, once they compromise all the ministers, and the national budget will be forwarded to the cabinet by the Ministry of Finance. The step 6 is this provide the basis for cabinet discussions, which may result in further revisions. Even in the cabinet level also, they do some kind of discussion to revise the budget. Now it's approval and enactment. The budget is ready to submit the parliament for approval. The budget is then presented and debated in the parliament, and then published together with detailed estimates, setting out expenditures by departments. So what are the detail the procedure prescribed? So you may visit the website, Ministry of Finance website, Treasury. then you can find the budget speech, where you can find a lot of a well detailed budget. For the formal authority to spend depends on Parliament voting for the funds through approval of finance bill, hence terminology of votes. The specific ceiling for expenditure voted by the Parliament. Finally, the Parliament will authorize the budget to make spending. And then performance execution, right? Performance. So when the budget appropriations mean what? The budget allocation of fund. The budget allocation of fund we call what? Appropriations. When the budget appropriations are approved, resources may be released to spending agencies, initiating budget executions. So here, once the budget has been approved by the Parliament, then the money is ready to forward, to allocate, release. The money is really ready to release. The public money available in the treasury is ready to released by the Minister of Finance to line ministries to implement their proposals. The central bank normally hold government fund within a single treasury account, so albeit with sub-account or general fund, known in Commonwealth countries as consolidated fund. In Commonwealth countries, this the treasury, the fund, the treasury account, call it consolidated fund. Consolidated fund means all the departments, all the government institutions should deposit their money in the consolidated fund. Treasury. We call it a treasury. Procedure for release of fund from general fund to the spending agencies account. The Minister of Finance, then here this is what? This is consolidated fund. Then Minister of Finance will take the money take out money from the consolidated fund to each line ministries. Then to release the fund, he may use warrant. Withdrawing. So normally, in our individual account, in the bank account, to withdraw money, we have fill some check, or we fill some slips. Likewise, to withdraw money from the consolidated fund, the Minister of Finance will use warrant to withdraw money. The procedure for release of fund from the general fund to the spending agencies account usually held at delegation of central bank or commercial bank, differ from country to country. In many LDC funds are released in equal installment, either monthly or quarterly. So the government not give the money to particular line ministries at once. It means the money available in the considered fund, it will be paid to the line ministry on installment basis. The first release establishes an impress account, which is replacement against the submission of account, like a petty cash, right? Impress system. In most Commonwealth countries, the release of funds controlled by formal warrant, which may specify the line items against which the agency may incur expenditure. Then performance execution. Spending agencies like line ministries and public sector organizations, departments, spending agencies are usually responsible for the disbursement of funds to suppliers, contractors, following a series of steps designed to ensure that procurement procedures are applied and limits set by the Parliament appropriations are respected. So these steps are what? So for example, in the budget, 100 million or 1 billion is allocated 1 billion allocated for to construct a building in a university, right? The government has allocated budget amount of 100,000 to construct a building in a university. So it means that when they are spending this money to construct this building, finally they will pay money to the suppliers, the contractors. So when they do the expenditure, they have to follow a procurement procedure. There's a series of detailed steps. So how to select contractor, how to design, how to whom is should be bidded, who is going to evaluate. So that kind of things very detailedly mentioned in procurement procedure. So they have to follow that. So these procedures you couldn't find in the budget. So it's a normal procedure practiced by the government sector organizations. The steps are commitment of funds. Here the fund will be released from the ministry, the constituted fund. Then acquisition of goods and services. So for example, they start construction of building and make payment to the contractor and record the transaction, reporting the transaction. It's called accounting. Finally, evaluation or reporting. On completion of the budget year, the Ministry of Finance or Treasury will prepare final government account. Ministry of Finance will prepare final account. Like companies, every end of year they are preparing annual report, final accounts. Likewise, government also should prepare government accounts, which are then audited by comptroller, not controller, it's a comptroller. Sometimes call it auditor general or equivalent. To ensure independence, the auditor is usually responsible to the parliament. So in companies, the independent auditors are responsible to shareholders. They can speak at general meeting. Like that company's auditor general department, the auditor general is responsible, accountable, not to the Minister of Finance, not to the government. He is responsible, he is accountable to the member of parliament. To ensure independence, the auditor is usually responsible to the parliament rather than to the executives. And audit report are laid before the parliament and discussed by public account or budget committees. And the second phase, as I told you here, second phase is done by the World Bank handbook. So first what they do, review the policies, review the previous planning and implementation period. So simply they have to review the previous budget, previous year budget, last year budget, and based on the learned lessons, mistakes and performance, they are revise and set policy and undertake planning activity, establish resource framework, set out objectives, policies, strategies and expenditure priorities, and mobilize and allocate resources, then prepare budget and implement and plan activities. So collect revenue, release fund, deploy personnel, undertake activities. And the fifth one, monitor activities and account for expenditure. The sixth one, evaluate and audit the policy activities, effectiveness, and feeds the results into the planning. So this is what the second phase. Sometimes we call it a different view rather than saying second stage. This is another model for budget cycle. So you can use for both sides. So this presentation appears to assume that the process of policy review and formulation can take place in step with the budget cycle, which is said to be hardly ever feasible in practice for the reasons outlined above. and we will discuss this matter in the next class. Any questions? Any questions? Okay, if you have no questions, you can leave meeting now. Thank you very much.